Big moves from Tesla this past quarter, and it's not just the Cybertruck that's breaking the internet. The company just cranked out its 400,000th vehicle at Giga Texas, teased a new sub-25,000 model, and stirred up headlines with some classic Elon antics. Meanwhile, Wall Street's watching like a hawk. The stock's trading at $255, up about 1% since yesterday, but still down over 47% from its December peak. As Uncle Warren might say, only when the tide goes out do you discover who's been swimming without pants. So, is Tesla still suited up? Let's break it down. Tesla's price to earnings, PE ratio, currently sits at approximately 120, which makes even Silicon Valley blush. That's well above the auto industry average of 15 to 20. Translation: investors see Tesla as part automaker, part tech wizard, part sci-fi prophecy. But with earnings down 53% year over year, this valuation leaves as much room for error as a tightrope walk in a windstorm. It's high expectations on autopilot. Just pray there's no software glitch. On the sentiment front, analysts are divided but hopeful. Kind of like a family dinner where no one agrees on politics, but everyone wants dessert. Out of 38 analysts, 22 say buy, 9 say hold, and 7 say sell. The average 12-month price target, around $299, which implies an approximately 18% upside. But let's be honest, Tesla's stock has a habit of treating analyst targets the way Elon treats traffic laws, more like suggestions. Now, a quick financial health check. Tesla's sitting on $36.5 billion in cash with $19.5 billion in long-term debt. That's a $17 billion net cash cushion, enough to build a few more gigafactories or buy Twitter again. Just kidding. We hope. The current ratio is approximately 2.0, meaning Tesla's liquidity is stronger than most folks' New Year's resolutions. And free cash flow? A solid $3.5 billion in 2024, despite all that spending on expansion. When it comes to market position, Tesla still rules the EV jungle. In the first quarter of 2025, it sold approximately 128,000 electric vehicles in the U.S., with 40 to 45% market share. Globally, Tesla narrowly edged out BYD for the top BEV spot in 2024. But the competition isn't napping. BYD, VW, GM, even Hyundai are gearing up like it's an EV version of Game of Thrones. Strategically, Tesla is pushing hard into AI, software, and energy. From robo-taxis to humanoid robots, yes, Optimus is real. They're doing everything short of building a Mars shuttle for your daily commute. The energy side, pulling in $10 billion in revenue last year with approximately 26% gross margins. And Tesla's charging network, now open to other EV brands. A rare move of generosity that also happens to rake in more revenue. Call it capitalism with a plug. Zooming out to broader market trends, EV adoption is accelerating faster than a Model S Plaid. EVs made up about 14% of global car sales in 2024, and that's climbing. Governments want cleaner roads, and Tesla's happy to pave the way. But macro headwinds, interest rates, tariffs, consumer fatigue are like potholes. Not fatal, but they'll shake the ride. But let's not ignore the risks. That sky-high PE means Tesla's priced for perfection. One earnings miss, and the stock could drop faster than Elon's approval rating at a New York Times dinner. And competition? It's no longer Tesla versus the world. Now it's Tesla in the world. Everyone from Ford to Ferrari wants a bite of the EV pie. Even Google and Amazon are working on their own chips. Tesla's not just racing car makers anymore. It's in a tech arms race. Technically speaking, the Maxi D is in the red but creeping upward, kind of like a hangover lifting after a strong coffee. The RSI sits around 45, which is neutral. Neither party nor panic. If you're a chart watcher, this is the nap phase before the next big move. Want to geek out with the numbers? Grab the Wisesheets template linked in the description. Looking ahead, the April 22nd earnings report will be the next big moment. If Tesla can show margin recovery or major progress on the new model ramp, that could reignite the rally. If not, well, Buffett once said, the market is a device for transferring money from the impatient to the patient. So buckle up. Thanks for watching. Smash that like button like it's a steel Cybertruck window, just not too hard. And we'll catch you in the next one.